1. Gold prices rise amid global uncertainty and weaker US dollar. 2. Gold mid-year outlook 2025, is gold set for a second wind? 1. Gold prices rise amid global uncertainty and weaker US dollar. In a world filled with uncertainty, gold shines brighter than ever as a safe haven asset. On July 18, 2025, gold prices experienced an uptick, driven by a weaker US dollar and persistent geopolitical and economic instability. This surge in demand for gold comes at a time when platinum prices have slightly retreated after reaching their highest point since 2014. As of 3:53 p.m. Eastern Daylight Time, 17:53 GMT, spot gold increased by 0.4%, reaching $3,351.18 per ounce, following a decline of 1.1% in the previous trading session. Meanwhile, U.S. gold futures also saw a rise of 0.4%, settling at $3,358.30. Edward Mayer, an analyst at Marex, noted, "The precious metals market is witnessing gains across the board, thanks to the weaker dollar." The dollar index, which measures the value of the US dollar against a basket of other currencies, fell by 0.3%. This decline makes gold more affordable for international buyers, thereby increasing its appeal. Suki Cooper, a precious metals analyst at Standard Chartered Bank, highlighted that concerns regarding the rising U.S. debt and updates on tariffs are likely to keep gold in the spotlight. She stated, "For now, the support for gold prices appears to be solid." On the trade front, Indonesia is still finalizing the specifics of its new trade agreement with the United States. Additionally, U.S. Treasury Secretary Janet Yellen mentioned to Japan's Prime Minister that a favorable agreement is still achievable. Earlier this week, President Donald Trump indicated he does not intend to dismiss Federal Reserve Chair Jerome Powell, although he has criticized Powell for not reducing interest rates. Market analysts are predicting that the U.S. may implement 2 rate cuts by the end of this year, totaling 50 basis points. Gold typically flourishes during times of economic uncertainty, and lower interest rates tend to enhance investor interest since gold does not yield interest. In contrast, spot platinum saw a decrease of 2%, falling to $1,428.65 per ounce after reaching its peak earlier in the day. David Wilson, a senior commodities strategist at BNP Paribas Markets 360, anticipates a decline in Chinese demand for physical platinum and jewelry, which may lead to a price pullback in the third quarter of 2025. Palladium prices dropped by 1.6%, settling at $1,259.09, while silver experienced a slight increase of 0.3%, reaching $38.23. Despite long-term concerns regarding the growth of electric vehicles and recycled supply, the sentiment surrounding palladium in China remains optimistic. Dr. Jonathan Butler, head of business development and strategy at Mitsubishi Corp., noted that catalyst loadings are expected to rise in anticipation of the China 7 emissions legislation set to take effect in 2028. As we navigate these turbulent economic waters, the question remains, how will these developments impact your investment strategies? Are you leaning towards gold as a safe haven asset, or do you see potential in other precious metals? Share your thoughts in the comments. 2. Gold mid-year outlook 2025, is gold set for a second wind? Gold has been making headlines in 2025, soaring 26% in US dollar terms by mid-year. This impressive rise was driven by a weaker US dollar, stable interest rates, and heightened global uncertainty. Investors are now wondering if gold's ascent will continue or if it's time for a pause. According to our gold valuation framework, we expect gold prices to stay relatively stable with a slight upward push, potentially rising another 0 to 5% by year's end. However, if the economy takes a turn for the worse, we could see a significant increase of 10 to 15% as investors seek safe haven assets. On the other hand, if global conflicts resolve, we could see gold prices drop by 12 to 17% as investors return to riskier assets. This year, gold has outperformed all major asset classes, hitting new record highs nearly 26 times. The US dollar's underperformance and geopolitical tensions have fueled demand for gold, with trading volumes reaching record levels. Central banks have also been buying gold at a steady pace, contributing to the surge in prices. Looking ahead, the second half of 2025 presents a delicate balance. While economic forecasts suggest gold prices will remain stable with a slight upward trend, there's potential for significant increases if the economic and financial conditions deteriorate. Conversely, if tensions ease, we could see a pullback in gold prices. The key drivers of gold's performance include economic expansion, risk and uncertainty, opportunity cost, and momentum. Our analysis shows that gold could move sideways with some upside potential under current market expectations. However, if economic and financial conditions worsen, gold could see a significant increase in value. Conversely, widespread conflict resolution could lead to a decrease in gold's value. It's important to note that gold's performance is not just driven by economic factors but also by geopolitical tensions and investor sentiment. As we move forward, gold remains a valuable asset for investors seeking stability and potential growth in uncertain times.